It doesn't make sense. When you've got a money printer, the only reason you want to have it is so that you can get free stuff. Now, getting free stuff is not a good thing because it's destroying the industrial capacity of the country. It's destroying the ability of people to work. It's destroying not all, but it's not conducive to the growth of industry in the US. So you do want to fix that. And so the way to fix that for me is to get rid of the money printer. The way to fix that goes back to Bitcoin.
In a world where central banks wield the power to print money at will, Saifedean Amos presents Bitcoin as the antidote to the economic distortions caused by fiat currencies. By eliminating the money printer, Bitcoin offers a path to restore industrial capacity and incentivize productive work.
So I would say the total market for a monetary asset is about $300 trillion. Bitcoin's already at 2 trillion, which is, impressive because in 15 years going from 0 to 2 trillion is the fastest that we've ever seen. We've never had an asset, anything, grow this fast. So it is quite impressive, but still got a long way to go.
Amos highlights Bitcoin's rapid ascent to a $2 trillion market cap, emphasizing its unprecedented growth. Yet, when compared to the $300 trillion total market for monetary assets, Bitcoin's journey is just beginning. The implication is clear. There's immense room for expansion as Bitcoin positions itself as a global monetary standard.
I think the number go up technology in Bitcoin, the fact that Bitcoin appreciates a lot faster than gold and a lot more than gold, and the fact that it's a lot easier to verify, those are the two things that people need to get.
Bitcoin's superior appreciation rate and ease of verification set it apart from traditional assets like gold. These attributes not only make it an attractive investment, but also reinforce its potential as a reliable store of value in the digital age.
Ultimately, money is a game for cash balances, and the bigger the cash balance, the bigger the liquidity, and the more that something can function as money. So you want more people to be holding Bitcoin.
Liquidity is the lifeblood of any currency. Amos underscores the importance of widespread Bitcoin adoption to enhance its liquidity, thereby solidifying its role as functional money in everyday transactions.
But yeah, ultimately, as you said, whether it's strategy or it's BlackRock, it's not like Michael Saylor himself or Larry Fink himself owns all of those Bitcoins. They have shareholders who own those Bitcoin, or ETF holders who hold those Bitcoins. And to the extent that BlackRock and Strategy hold those, they hold them because they are doing their fiduciary duty to their shareholders and to the ETF holders in a satisfactory way.
Institutional adoption of Bitcoin isn't just a trend, it's a fiduciary responsibility. Major financial entities recognize Bitcoin's value proposition, integrating it into their portfolios to fulfill obligations to stakeholders.
I think the way to do that would be to just keep buying Bitcoin until the value of the Bitcoin held by the US government is equal to the outstanding money supply, and then you're able to redeem all the outstanding dollars for Bitcoin.
Amos envisions a transformative approach where governments accumulate Bitcoin reserves equivalent to their money supply, enabling a seamless transition to a Bitcoin-backed currency system. Such a shift could anchor monetary value in a deflationary asset, curbing inflationary pressures.
And so money wants to be one, and it's the same money for robots, for machines, for humans. Everybody wants to use the most liquid money. Everybody wants to use the money that has the highest liquidity, the most salability, the one that you can sell at with the least amount of slippage. So everything